Hello, hello, hello. Good morning, good evening, good night, everybody, depending where you are in the world. Welcome to a Capital Hungry New York Scalping and Analysis live stream. Could I get a quick audio and visual check? Sorry, I was just a little bit late here. It took a while for the broadcast to actually start and streaming on YouTube here. It seems like the chat's active. Looks like everything's good to go. Yeah, I think Raja is streaming as well. Wicks don't lie. So most likely we won't have many viewers today here, but we'll probably get some of the gulaggers that will show up after Raja's stream finishes. But it is what it is. It's all good. I don't care too much about how many viewers I have. If it's a lot, that's just a bonus. So, welcome to the Capital Hungry New York Scalping Session and Analysis stream. Through this stream, over the next hour and a half to 2 hours, we're going to be doing some analysis on gold, GJ, GBPUSD, Euro USD, USD CAD, and US 30. We're also going to be reflecting some of the trade ideas that have played out that were given for free a couple of days ago during the Monday market analysis webinar. A day ago now. Did anybody get a chance to watch this? Right? So if you got a chance to watch this, you're going to have a good understanding of what I'm looking for and why, as we have a good chunk of these trade ideas from that prior Monday market update analysis playing out. As well as if you understood the bad economic data we had yesterday too. Okay, so I did a quick little breakdown there. All right, anyways, for anybody who is new here, before we get into it, let's just go through the stream reminders. Make sure to read through the description. You have tons and tons of resources linked from a Capital Hungry News Twitter, Capital Hungry free Telegram analysis channel. In there you can see analysis, charts, news, trades I take, the YouTube channel itself, and information about the private channel. Okay. Am I trading? I already took a trade. I took gold buys, the same buys that I called out to everybody else from 1812. I just took those here. Broker Dominion Markets. I took it based on the same market update analysis. I waited for the rejections and failure to break 1810, breaks back above 1812, and I took multiple entries in that area right at the key level following the pre-planned analysis, and I exited out of the market for about 60 pips on average positions. So I already took that gold trade, but that was overnight. Like, I took that entry at Asian yesterday and held it while I went to sleep overnight. You know what I mean? So it wasn't like a scalp. It was more of an intraday style trade of a 1-to-3 risk versus reward ratio, where I had about a 20 pip stop loss and was looking for about 60 to 80 pip gain. Right? So anyways, the analysis for these gold buys was also given in that Monday market update webinar about 1812 key level being a very, very significant price zone. But if you want to check out trades I've taken, information and so forth, Snapchat, you can just check out the free Telegram analysis channel. Okay? So through this stream, we follow a process of combining fundamentals as well as technical analysis, but adapting that to the scalping trade style. As we're doing our stream during pre-New York hours going into New York Open, the concept and ideology we are trying to use is catered more towards the scalping style of taking advantage of the session volume as well as the volatility on smaller time frames and smaller pip ranges. So as a scalper, which is a completely different trading style from intraday or swing trader. Your goal is to take quick jabs at the market and only be involved in a position or trade for a short period of time or for a very small pip range, 10, 20, 30 pips and so forth. So what we're going to be doing is looking at what economic events we have on the docket, analyzing market sentiment and movement of price overnight, as well as analyzing current market structure and price action so we can map out some trade ideas on gold, GJ, GU, Euro USD, USD CAD, and US 30. Okay, so let's start off here on gold. But before we do that, let's make sure we have an understanding of the current fundamental sentiment. In terms of fundamentals impacting the market, some main key factors has been the still ever increasing and high global inflation. Whether it's from the US side, we're seeing the same thing in Eurozone, same thing in UK overnight. So this inflation is a major driving factor on various asset classes still holding their bullish structure, such as gold and oil, and we can use that to our advantage. So what we've had happen here, first let me go through some of the economic events. So we've already had our inflation figures overnight, where general inflation overall across the board was still very high on the UK CPI, RPI, CPI data from Germany and so forth. I'm expecting this inflation to still be high on the Canada side as well, as we have that CPI data at 8:30 a.m. Eastern, the same time we have some housing data for the US. But this is really our focus through this New York trading session, is a little bit of housing data and information from the US, which I expect to show a bit of a decline and start to level off there. And then some inflation figures from Canada, which I still expect to be high and further supplement our increasing global inflation, which in my opinion should keep gold relatively bullish. Global inflation being high, US inflation being high, and so forth. It should keep gold relatively bullish, but that's still another hour and 10 minutes away from now. Now, I'm going to go to the 4-hour chart here. Actually, we'll even go to the 1-hour chart, and we can see that from this 1785, 1789 demand zone, where you can clearly see that from this area institutionally, you get smart money collecting buy orders. From this area, we've had a very strong bullish rally all the way up to these previous highs at 1828 with failures to break higher, okay? Even though this price action here after the rejections at 1828 may seem very sporadic, like sellers are coming into play, essentially all this is really pullback structure that's forming after you're having buyers take profit from these significant highs. As those buyers take profit from these significant highs after having a solid rally from the 1785s, sellers jump in hand, and this creates a pullback to retest better buy areas before continuing back up bullish to go back up into 1830s and potentially higher. So this is just a pullback to a more favorable demanded price point, in my opinion, to collect more buy orders in the market before continuing up. Let me give you guys a great example in previous market structure and price action run, because the issue is when people start to see these rejections and start to see gold entering this type of structure, they start to say, oh, sellers are in play. It's bearish, we're gonna melt and so forth. But they don't understand that once you backtest gold and understand the behavior of transactions between buyers and sellers on gold, it's very normal to see large consolidation phases or large pullback phases before collecting more order flow to continue with the overall trend. So let me show you guys a great couple of examples, okay? Sorry, my screen's freaking glitching out hard here. Okay, now I'm good. Let me show you guys a couple of examples previously on like a bullish run. For example, you can see here, this is the 1680 demand zone, which is a weekly price point of interest. From this area, you get a double bottom created technically, which shows sellers exiting the market and buyers jumping in. And you have a very strong bullish rally as you continue your way to the upside. But you can see it's very normal to see as you're trending bullish, you enter these consolidation phases or aggressive pullback phases before continuing with the overall bullish trend. And for example, when you zoom in here, you can see it looks like very similar price action to what we're getting now. You get rejections at a high, you start to respect a resistance, you start to enter and see more bearish candles and bearish corrective structure. But as you go back to retest a more favorable demand zone and collect more buy orders in the market, you still end up continuing your way to the upside, right? In this situation, you're trending bullish. And here you enter a pullback where that pullback is almost 300 pips before continuing up. Here, instead of having a pullback, you enter gold in a consolidation zone for a period of a week where it's failing to break those highs and lows, generating order flow in the market to continue up overall bullish. Okay, so when I am looking at gold in this current structure, especially when you're looking at the daily time frame, right? What you actually have happening from that demand zone is a very, very strong bullish price action and market structure. How do you validate that? On the 4-hour time frame or on the intraday time frames or even on the daily, you're seeing much larger bullish candles and consecutive bullish candles. And also you can ask yourself about the market timing. Here, it took roughly 2 days of buyers price action to go from the 1800s to the 1830s. This 50% correction so far of the impulsive move has only been from the 1830s to the 1810s and has almost taken a week of bearish price action to do that pullback. This stretch of price action we're seeing here in terms of the bullish impulsive move having a bit of a pullback phase and corrective phase before validating more buy orders in the market and continuing up bullish is also what we've seen in these situations here, right? For example, very strong bullish run that goes to peak into new intraday highs. Then you have a few days of pullback structure that doesn't break the overall bullish structure, doesn't correct that impulsive bullish move, and then you continue your way after collecting more buy orders to the upside, right? Here you have, again, from this area, a strong bullish rally. Very strong bullish candles, consecutive bullish candles. Here you get a pullback all the way to that same demand zone, doesn't break the overall structure, very weak bearish candles in terms of the candle body closures with harder wick rejections, and then as you have more buy orders collected, you continue up very bullish. You don't actually start to get a shift in price action until you reach 1830s here, and then you have one singular daily candle cancel out 3 days of bullish price action, showing you a lot more sellers pressure in the market. Does that make sense for everybody? Right? Right now, what we have is very similar to what we've seen in this stretch of bullish price action and run, and very similar to this stretch. We're having an upside rally from that same strong demand zone, buy orders flooding the market, enough buyer volume to have us revisit these previous highs, not enough to break higher at that time. Buyers start to take profit and liquidate positions. Sellers jump in hand, creating a pullback phase. If we don't break below the 1810s, my expectations is that after we break above the pullback phase, we should have nice continuation moves back up to the previous highs. and into new highs in this bullish trending market. Does that make sense for the higher time frame market structure and price action reading? Then when you go look at the 4-hour time frame, you can see this even more relevant. This price point here, where we came to retest, is very significant based on a fundamental reason. The fundamental reason is that this bullish impulsive move that led into these previous highs of 1828 came from Jerome Powell's testimony in front of Senate and in front of Congress, where he brought a slow and steady approach to rate hikes. Then after that, it followed up with higher US consumer inflation, which are both bullish fundamental factors for gold. Okay? So number one, when you're looking at the intraday time frames, this price sensitivity area of interest when you're looking at bullish trending market is you're having buyers consistently print higher highs, having pullback phases that continue to go to the upside. This liquidity grab and pullback went to revisit that previous high price point as a demand zone to collect more buy orders in the market, right? From this area, we can notice a lot more exhaustion by sellers and sellers exiting out and buyers jumping back into the market from that price point. This is also a very significant price point because this was the day Jerome Powell testified in front of Senate and discussed monetary policy, a slow and steady approach to rate hikes, and that obviously led to a bullish move on gold and a bearish move on dollar at that time, right? So right now, all I'm basically dissecting this as is we had rejection at 1830s, not enough buyer volume and order flow to break above higher, profit taking and corrective pullback structure that's formed. Now that we've held the 1810s, if we can break above 1820s during our New York trading session, I'm going to be looking for the buys to start scaling up as scalps, but also intraday trades to play with the overall bullish trend. So on top of the corrective structure, as well as the current key levels, these are the trade ideas I'd be looking for on gold. Primarily looking to see continued higher economic global inflation, potentially worse US economic data, holding above 1812. I'd be looking for pullbacks to 1816 medium term zone, breaks above 1820, breaks above 1824 buys. I want to at least start to target previous highs here, right? And before you understand that, take a quick visual snapshot of that, right? Take a quick visual snapshot of that, because let me show you a great example of something like this that has played out before. Look at here. Let's look at this price action run here. This is a beautiful, great example, okay? You have a strong bullish rally that goes up into intraday highs. After peaking those intraday highs, you enter some pullback structure all the way until you go back to retest these previous high price points to the left. Here, this demand zone. As you come to this demand zone, which this overall pullback is still only a 50% correction of the impulsive bullish rally, that's where the whole ideology behind the 50% retracement for Fibonacci and shit comes from. But anyways, you don't have to really use a Fibonacci tool. You can just measure the pips. So you can see as you have this bullish rally, from this bullish rally of the 1760s all the way up into 1812s, there was very minimal pullbacks. It was just a nice consecutive bullish rally until we came up to a significant previous high, which I'll show you guys to the left, and you start to see some profit taking by buyers and pullback structure formed. The buys I took last night were an example of a support being created and demand zone being respected at a previous significant price point of interest. What I'm looking to take advantage of the session is having the breaks above the corrective structure, buyers back in play, and targeting the previous highs again. right? You can even see here, as you targeted the previous highs and went into higher highs, at the higher highs, you had profit taking happening again, pullbacks that came all the way to the same demand zone again, and then buyers jump in the market from that same demand zone again, continuing up to these highs, still maintaining the integrity of the overall bullish market structure. Does that make sense? This type of repetition here, where we've had a strong bullish rally, profit taking from the highs and pullback structure, demand zone respected and created at a previous price sensitivity area where you can notice the support being created, this area being the high risk buys, the break of the corrective structure taking you back up to the previous highs with the bullish fundamentals in play. Take a snapshot of this right here. This whole chunk of market structure and price action right here in the yellow box, take a visual snapshot of this. Because when we come right here to current price action and market structure, that's exactly what I see. Bullish market structure and bullish rally to a significant previous high. From this previous high, you're having some pullback bearish market structure. This pullback bearish market structure came down to retest this previous intraday high and also fundamental price point of the Jerome Powell testimony day. From here, you can notice clear-cut rejection signs. This 1812s is exactly what I told you guys in the Monday market update webinar. This is your high risk, high reward buys. As we start to break above the corrective pullback structure in 1820s, our expectations are to at least target and revisit these previous highs. Does that make sense to everybody? So with that being said, again, the trade ideas on gold are obviously as follows. My main bias is buys. At either 1816 pullback at New York Open, break and retest above 1820, or breaks above 1824, playing the bullish fundamentals, higher global inflation, right? The slow and steady approach by the Feds, bullish market structure, and starting to notice the exhaustion by sellers and buyers jumping in from this better demanded price point before continuing us back up. Exactly, Silk Road, exactly. So with that ideology, I could only switch into a sell bias if we had clean breaks below 1810. I would only switch out of my buyer bias and switch into a sell bias by breaking below 1810. This is why you can also see overnight, I trusted my own analysis to take the 1812 buys, right? 1812, 20 pip stop loss below 1810, because below 1810, my buy analysis would technically be invalid. Breaking below there would invalidate my trade. So I risked 20 pips in terms of a stop loss. I entered at the key level, following the pre-planned analysis, live account, Dominion Markets, great broker, and then I took profit at a 1-to-3 risk versus reward at 60 pips up. The analysis for this was also given for free on the Monday market update webinar. Okay? But you can see I'm following the exact concepts in pre-planned analysis and exact same trade ideas I'm giving you guys, but I've personally been more focused on intraday style trading and day trading. potentially holding trades for an entire session or a couple of days and so forth, right? Okay. So that's what we're going to be patiently waiting for on gold, is if we can hold 1816 or get the breaks above 1820. Does that make sense for everybody? Now, let's go check out GJ. When we're looking at the Japanese yen individually, you can see to start out the new year, from new lows printed, we had a pullback phase. This is the exact inverse of bullish market structure. On the Japanese yen, you've had sellers dominant. As sellers continuously print lower lows, at these lower lows, they take profit out of the market. As they take profit out of the market, for them to actually exit the market, buyers need to jump in hand. You have to have somebody on the other end of your order for you to get out of the market, somebody to pick up the other end, in a basic concept of order flow explanation. In the modern market, where a lot of it is automated and you have market participants from around the world, banks, institutions, funds, and so forth, all of these transactions seem instantaneous, okay? But nonetheless, it's very normal that Japanese yen trends and behaves this way. This is the 4-hour time frame, overall very bearish. But anytime you have significant lower lows printed, you get some type of pullback phase. This pullback phase acts as a price setup to get sell orders collected from better price points to overall continue your way down. So what we can see now is that the Japanese yen on the intraday time frames is showing us some more bearish pressure after having a pullback phase. On top of that, when we're looking at GJ here, where the yen is obviously the secondary in the quote, what do you see on GJ here? What's the difference between what I just showed you in GJ's market structure of having a very strong bullish rally, potential rejection at a previous high significant price point, right? Very strong bullish rally. This just being a corrective pullback phase so far. You're just having a pullback, right? So from these highs printed by buyers, after having a huge strong bullish rally of almost 1,000 pips from the 149 daily demand zone, you can see we had very minimal pullbacks. You had minor pullbacks and just continuations to the upside. This is the exact same thing where you just entered some pullback structure until we came to this 155.5 demand zone. Last night in the private channel, we were looking for buys from this 155.5 demand zone. Okay? The difference between this situation here and this situation here is that you had a fundamental catalyst to induce GBP impulsive drop. This aggressive impulsive drop here was because of Bank of England rate decision during November before the year ended, where they did not increase interest rates and it led to a downside move on GBP. We don't have that same fundamental catalyst here. We're just maintaining overall bullish market structure here. Does that make sense to everybody? So what we're essentially starting to see on top of the key levels in PPLs is that we're actually at this previous demand zone here, and around 155 key level, we're starting to create a technical double bottom and seeing sellers starting to exit out of the market and buyers potentially starting to enter back into the scene. My expectations now is that if Japanese yen continues bearish and we hold above 155.5, once we break out of this corrective bearish lower time frame structure with breaks above 156.2, we should have a very nice bullish rally in bullish price action to make our way back up to targeting these highs, right? Let me show you guys a great example of this previously as well in terms of intraday price action and market structure on a bullish rally and run. For example, look at here where you have more aggressive pullbacks, right? Very, very strong bullish rally until you really start to get exhaustion around this price point at 152. You have some impulsive drops that come all the way down to this demand zone in previous price sensitivity area at 149. Once you break out of that corrective bearish market structure and validate the overall bullish market structure still intact on top of the fundamentals, you can see after those rejections at those lows, as you start to break back above, you have a strong bullish rally to target the previous highs and continue the trending market. Then from those previous highs, you even create a consolidation zone with a continuous breakout, right? You could even look at it more refined and just look at this. You can say, okay, we had highs printed by buyers at these new intraday highs. You have profit taking by buyers and creating a pullback phase in lower time frame bearish pullback structure. This pullback structure goes to the last previous demand zone at 148. This being the last area where you had an impulsive breakout, buy orders collected that led into these highs. As soon as you start having the double bottom created at that demand zone and the break above the corrective structure, you go to target these previous highs and have a very nice bullish run, right? It's no different from the market structure here. Very, very, very strong demand zone at 149. This demand zone at 149, this buyer's price sensitivity area, is not just is a higher time frame demand zone. We haven't broken this area on the weekly for an extended period of months, for the whole year of almost 2021 to 2022, right? And what you want to notice is every time you have buy orders collected from this area, look at what happens. Every time you have buy orders collected from this area, on the higher time frame, you actually extend into higher highs. You actually, every time you have buy orders collected from an institutional standpoint at this demand zone, once you have those orders collected and you start to peak above the previous highs, you go to print higher highs. So my expectation is if we have the buyers and come back into the market and break out of this corrective structure, is we should at least revisit these previous highs and even start trending even further bullish into the 160s. Isn't that very interesting to see? This demand zone has held for 6 months. Every time you go to this demand zone, reject, have buys collected, you extend it to a higher bullish rally. Very interesting, right? So when I am looking at GJ here, the same time we have Japanese yen weaker, and we're starting to get some double bottom rejection confirms at 155.5 flat. What I'm essentially going to be looking for, that's a great question, Ryan Reynolds. On risk currencies, higher inflation on a global scale is actually a positive. No, inflation does not devalue a currency on a global scale against other currencies. We trade currency pairs. So a risk currency, like for example, inflation inflates the price of all goods and services within an economy. And it's different when you're having the impact of inflation on a safe haven currency or world reserve currency like the US dollar versus something like GBP or euro or so forth. Higher inflation figures for something like GBP against the Japanese yen or against the US dollar will inflate the price of the currency itself too. Okay? It's a different impacting factor than compared to the US dollar. Because somebody said everything will dump, Russia will invade Ukraine. You're a fucking retard, bro. Sorry to say. This isn't technical analysis either. We're doing fundamental analysis. But has Russia invaded Ukraine? No, they haven't. So is that going to help us today with some day trades or scalps? No, it's not. Your retard ass is going to be sitting around waiting for Russia to invade Ukraine to finally take a trade in the markets. By then, we're going to generate more wealth. Fucking retard, man. So anyways, my expectations is that if we hold 155.8, break above 156.2, break above 156.5, as long as Japanese yen stays weak and we hold the bullish higher time frame market structure as well as hold above 155.5, we should see some nice continuation buys to the upside. Okay? So we're going to obviously identify this pullback structure accordingly here. But on GJ on the lower time frame, I'm looking for this. 155.8 buys, 156 break above lower time frame buys, breaks above 156.200 buys. All right? We're just having a little 1 minute high printed, minor little pullback here. Order block and support being created on the lower time frame. If we break out and break and retest above 156, you'll see a nice buy scalp to take advantage of 10, 15, 20 pips back up to these 1 minute highs. But just keep in mind, in terms of market timing right now, we have 10 minutes until New York Open. So most likely we're going to get that little bit of a liquidity grab at New York Open anyways. Okay? Hopefully some optimistic comments from Boris Johnson helps with our GJ buy setup. But don't take any trades yet on gold or GJ or any pair because it's looking like we are trying to scalp. And we are, sorry, why did I say it's looking like? We are trying to scalp in potentially intraday trade. When you're doing that, you have to keep in mind the market timing and you have to understand we have a session open in 10 minutes. With a session open, there's high probability of liquidity grabs and order flow setup. So it's best just to wait for the 10 more minutes for New York to open. Maybe GJ will make a little bit of an hour lower wick, then come back above 156 for the buys. If you want to take the buys now, you can, but you're going to have to hold through the New York Open potential pullback and keep your stop generally below this area. You know what I mean? So that's up to you. That's a good question, Mr. D-Braz. I don't like to wait for breaks of highs and lows to scalp because, especially on the intraday or higher time frame, I like to just play with the trend, play with the momentum. Sometimes that can be playing a pullback in continuation to a demand zone. Sometimes it's the continuation breakout. But it's best just to, because scalping is playing such short time frames and also playing very short pip ranges, you're looking to get 10, 20, 30 pips out of the market. You're looking to be in the market for maybe 5, 10, 15 minutes in an actual position. Very short, quick jabs at the market. You don't essentially have to wait for breaks of like higher time frame highs or lows or intraday highs or lows. You can just scalp with the momentum following your pre-planned analysis. Like for example, on GJ here, in the Capital Hungry private channel, we were looking for buys at 155.5, retesting that demand zone. On the 1 minute, you can see the support created there. If you weren't confident in entering at that demand zone, that's perfectly fine. you get a shift in this minor lower time frame structure, and then you get some nice bullish price action, break and retest above 155.8. This is a 30 pip range. This is a 20 pip range. You get the break and retest above 156, another 20 pip range. As scalpers, you playing these ranges, taking your jab at the market, being in that trade for that 10, 15, 20 pips, possibly 5, 10, 15 minutes, that's how you're supposed to be scalping, right? Sometimes on a volatile pair like gold, you can have a scalp of 30 pips, 50 pips play out in 1 minute. You could have gold doing 10, 15 pip movements in a singular 1 minute candle in seconds. You know what I mean? So let me give you guys a psychological reminder, okay? You have to understand that in the fucking tongue twister. I talk too much. You can roast me about that. You have to understand that psychologically, when you are scalping, you have to be perfectly ready to make very fast decisions. This doesn't mean make emotional decisions. This means after doing your pre-planned analysis, understanding what you are looking for, having your bias in play, that you are very quick in your decision-making process. That goes for all aspects of the scalping style, from your entries to your trade management to your take profit. Okay? All of this has to be very fast decisions you make, because scalping is so time sensitive. If you don't make a decision in a very fast period of time, as per your pre-planned analysis, most likely you're going to miss an entry and have FOMO. If you don't make a quick decision of when to take profit, if you don't have a hard take profit set, most likely you're going to have to deal. Like, let me give you guys a great example. Let's look at this quick move from 156 to 156.2. Very beautiful price action, right? 1 minute break and retest. You go 20 pips from your 156 entry. You could have had an easy 5 to 10 pip stop loss below the PPL. And you have your trade play out within minutes to 156.2. If you don't make the decision to close your trade and take that profit out of the market, within 5 minutes, 10 minutes after, you can lose a good chunk of your scalping profit and even come right back to your entry again. If you allow greed to enter, or if you allow fear to enter into play, this is going to slow down your decision-making process. If you are too scared to enter a trade as a scalper, your decision-making process is going to be slowed down. Majority of the time, you're going to miss the trades. You're going to say, oh man, the confirms weren't there. Oh man, I missed the entry. Oh man, I got FOMO. Oh, I didn't feel comfortable entering, and so forth. It has nothing to do with the price action. It has nothing to do with the market structure. It has everything to do with your experience, your knowledge, and your decision-making process. Okay? So let me give you guys a piece of advice. If after, let's just say, you spend 6 months trying to scalp, and you feel like you're missing a lot of trades and having a lot of FOMO, and you feel like you don't take profit where you need to take profit, at the end of the day, maybe the scalping style isn't for you. Maybe you aren't able to make decisions that fast, whether it be for entering, doing your analysis, and so forth. Because at the end of the day, another psychological reminder is that it's impossible to have FOMO scalping. How can you have the fear of missing out when scalping, when you're having 10, 20, 30 pip moves going on in the market around the clock? That FOMO in scalping is only your personal emotions of you having regret not actually executing. There's no FOMO in scalping. Like, for example, let's just say the GJ 155 trades as scalps. You missed 155. You weren't feeling confident in it. Okay, what about the continuation at 155.8? What about the continuation at 156 break and retest? You missed all of those entries? No, you weren't confident. You weren't confident to execute. You didn't do the pre-planned analysis. You don't have the experience developed to take advantage of the trade. So as it was setting up, you sat out. As it started moving up, Then you felt some type of way and said, shit, I wish I entered. It's very illogical and makes absolutely no sense to have the fear of missing out in scalping when the market is always moving these little small movements 24/7 around the clock. Okay? So, if you guys have spent 6 months to a year scalping and you realize that you're missing out on a lot of trades, you feel like you get a lot of FOMO, right? What I have to tell you is that maybe the scalping trading style isn't for you. Maybe you should try to adjust and try out some intraday trading style. Maybe you should try out something like swing trading or day trading, where you're gonna have hours of entry confirms, where you're gonna be holding a trade for potentially hours or days as well. Now it's crazy how I explained my thought process, but I'm sure he didn't realize it himself. What are you talking about? I figured that out myself. That's why I'm explaining it to all of you. But now, understand every single trading style has its goods and bads. With scalping, yes, you have to make very fast decisions, but you also get paid in a faster period of time. You have your scalp ranges get paid out in short periods of time. Smaller scalp and pip ranges you're looking to take advantage of, right? So that's the goods and bads of scalping. The bads is it's very time sensitive. You have to make very fast decisions and you have to be very objective, right? The goods are that you can have profit in a very short period of time. That's what really attracts new traders to start scalping. Okay? Now, with intraday trading, the good side is that it's not as time sensitive. You have potentially hours at a price sensitivity area to execute trades, right? And so forth. But the bad side is with intraday trading, it requires a lot more patience. You have to potentially wait hours for your setup to be ready. You have to potentially wait hours for your trade to play out, that 60 pips or 100 pips or whatever it may be, right? So every single trading style has its advantages and disadvantages. But what I'm trying to tell you is that you have to backtest and see what works for you, what fits your lifestyle, what fits your psychology. Okay? Okay, so anyways, those are the trade ideas on gold and GJ. If we get, so already we're getting a little bit of a almost 10 pip scalp. I don't know if anybody started jumping in that early. Like I was talking about, you can jump into it early before New York session open, but hopefully NY gives us a little bit of a pullback before continuing up, and NY is just opening up right now. Did anybody start to take the impulsive scalp entry? If you did, just be cautious of a potential pullback we can get right now at NY, okay? What I do like is the very strong bullish price action we're having. The rejection at this demand zone, the double bottom, very strong bullish engulfing candles. We had a rejection here, but still very weak rejection, very weak bearish candle. Still looking for these same buy scalp trade ideas. Okay? On gold, hourly candle close, hourly price action still looking nice and bullish. This hourly candle already has a little bit of a lower wick. If we don't break above 1820, 1816 buys, or start to look for the 1 minute breakout, break and retest above the 1820 buys, okay? And remember, we're scalping. Look to catch your 10, 15, 20 pips. Secure partials. Set it risk-free. Let your runners run, okay? I'm liking this little break and retest so far. We're doing above 1816 as well. Good rejections and buyers entering at 1812. The 1820 break should give us very clean cut scalps, at least 20 to 30 pips up to revisit these areas. All right. So those are the trade ideas on gold and GJ. Now let's look at our dollar pairs like GU, Euro USD, and USD CAD. Okay. We can see that when you're looking at the broad structure of GU, as the dollar has been bullish, GU has been bearish on the higher time frames, with sellers continuously printing with sellers continuously printing lower lows and lower highs, right? As you have these lower lows printed by sellers, you start to enter these aggressive pullback phases, where these pullback phases can last days, weeks, even sometimes a month, right? Every time a significant low is printed, you have a pullback phase that goes to extend to those previous price sensitivity areas before collecting more sell orders in the market before continuing your way down with the overall bearish market structure. Okay, this pullback we had on GU from these lows that were created at the end of the year, right? You can see from these lows created at the end of the year, gold didn't break above 1820 yet, so no confirms about buy scalps yet. But anyways, from the start of the new year, we've had a more aggressive pullback, but market structure is defined based on objective price points. This is the last price point of interest at 1.38 flat that's maintaining the integrity of bearish market structure. You can't just draw a trend line and say, hey, gee, we're breaking the trend line, bulls are in play on the higher time frame. No, this is the last price sensitivity area where sellers drove into lows. You had a pullback, more sell orders collected here that drove into lower lows. You cannot deny that this price point of interest objectively is maintaining the integrity of bearish market structure. That means GU could still easily come up to 388 before rejecting and starting to melt to the downside. So what we have happened so far is that this intraday bullish market structure is still being respected. If you guys followed the market update webinar on Monday, we had great buys play out from 1.36 retest that went up 50 pips. Currently, I'm expecting US dollar to be a bit softer with the expectations of weaker US economic data at 8:30. When I'm looking at GU here and the current intraday trending bullish market structure, you can see after having this intraday higher high printed, we had a deeper pullback to the previous high but failed to break, getting an aggressive bounce from 1.36 flat. Okay? From 1.36 flat, we had a 50 pip move. I'd still be looking for buys from a double bottom at 1.36 and buys from above 1.365. Okay? You can also see in terms of the lower time frame bearish pullback structure, we're starting to break above it. We created a nice support at 1.36 flat, previous high area. We corrected this impulsive downside move with stronger bullish candles. I'd be looking for buys above 1.365, or even if we come to 3.6 again, I'd still be looking for buys in this area. Just because in the short term, dollar didn't have enough strength to hold above the order block and instead retested the order block here. Freaking screen's frozen. So you can see the dollar is still relatively softer from its high points as it retested the order block but didn't hold above for the time being, and is showing some minor bearish price action on the intraday time frames for now when you're looking at the candle movement. This is more looking like we had a large consolidation zone after having buyers exit from the highs. and a break in retest to potentially continue back down to here. Okay? We didn't hold above the order block to show more buyer order flow and volume relevant in the market. Now, I want to show you guys something very interesting. You guys see this move that just played out on GJ? Right? Do the magic lines fail you? Where was it? It was even better here. Freaking computer's freezing, man. Go back about 10 minutes and look at exactly what I was telling you GJ is about to do on the lower time frame here. With the continuation up to 156.2. The magic yellow lines never fail. My computer's just super freezing right now. Okay? Right here, right here. What did I say was gonna happen? Bang, 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 bang. Cheat codes. It just gave the continuation move at New York with the minor pullback to 0.05. But still played out pretty nice. Anyways, let's go back to our analysis on the other pairs. Okay, so now, anyways, for GJ, guys, for continuation trades, breaks above 156.2 now. 1 minute breakout or break in retest, similar to this type of price action or this type of price action above 156.2 is what you want to see to extend the buys. If you caught the buys from 156 or 156.05 as we start to break out of that corrective structure, secure your 15 to 20 pips and leave your runners risk free. Okay? Who was able to catch those buys? Did Raja Stream catch the buys or call the buys? Let me know. Somebody let me know so I can chirp them after if they didn't. Hopefully they're looking for sells. I'm just joking. Okay, the only reason why I'm asking is if you caught the buys as a scalper, look to secure some partial positions. Remember, you just had profit play out in a few minutes. We followed our pre-planned analysis. No, Raja was in sells? You guys are joking. Raja wasn't in sells. Yeah, right. Oh, shit. I'll fucking message him about that after. So this is what we had so far play out. Evan, you caught it? This is textbook. Capital hungry textbook. And who else is giving minute by minute breakdowns? Who else is giving you guys price action on the minute? but in my opinion, for anybody who is a scalper, go back test and study the 1 minute time frame, because you're trying to play those lower time frames, smaller pip ranges, and so forth. Evan, great catch, bro. Great work. Good job. Good job setting it risk-free. Good job securing some partials. Let's see if we can break above 0.200. So far, we had this 20 pip. Yes, gold, we are waiting for 1 minute closures above 1820. 1820 on the 1 minute time frame has been a strong rejection area. Where the fuck where'd my epic pen go? 1820 has been a strong rejection area on the 1 minute. We're still respecting bullish higher time frame structure. As soon as we start to get 1 minute closures above 1820, you're going to see a very, very easy 20-30 pip scalp. But no entry confirms yet, as we're still closing below. Our analysis is either 1816 or 1820 breakout buys. So no entry confirms on gold yet. GJ, nice 20 pip run. Further buys would only be above 156.2. This is a epic pen tool I like to use for drawing all my arrows in boxes. You can download it like just on your desktop. You know what I mean? I don't like using the TradingView like arrows and stuff. You know what I mean? You always gotta delete them after. Here I can just clear it all quickly after. All right, so we know what we're looking for on GJ for continuation moves, but remember, if you are a scalper and you caught the GJ buys, that's it. You can be done for the day. You can come back tomorrow. You can still stay and watch the webinar for learning purposes and analysis, but you don't have to take another trade. You got your 15-20 pips within 5-10 minutes. You hit your target point of the previous high. You had your price action confirms. Little bit of a support being created, break and retest above 156, entries at 156 plus or minus 5 pips, giving that bit of a leeway. Target back to 156.2, 20 pips done. That's scalping, right? Now if you get a pullback, who cares? If GJ comes down and does a deeper pullback before continuing up or breaks back above, it doesn't impact you. You can wait for those setups, possibly take another scalp if you really want to. Let me explain something else psychologically. Let me explain to you guys the difference between overtrading and still scalping your bias, okay? If you take a win, yes, you can stop right there. But as long as you're emotionally neutral and not feeling greedy and sticking to your same bias and analysis, let's just say you took this GJ scalp. There's nothing wrong through a session taking 1 to 3 scalps following your bias and following your analysis. Let's say you took this GJ scalp. You closed it, got your 20 pips. GJ on the next 30-minute candle comes to 156 again and doesn't break. Your analysis is still valid. You're still sticking to the same bias. You're still following the same confirms. You can take that scalp again. Just like here, you had the 156.2 scalp, and then the same scalp again, 20 pips. Right? Or you might have closed this scalp. Let's just say we don't get the pullback. Once you get the break and retest above 156.2, you have confirms of breaking above that previous high in the intraday highs and the continuation of bullish price action. You're still sticking to the same bias. You're still sticking to the same trend. You can take another jab at the market there. But usually the best thing is, once you catch that winning trade as a scalp, you catch your 20 pips, catch those 20 pips and get out of the market, come back to attack another day. Emotionally neutralize yourself, Make sure you're not feeling too excited over the win. You're not feeling too greedy. You don't want more and more. And then come back another session. The market is, and that's another thing. Remember this very importantly. No matter if it's a pandemic, no matter if it's a war, no matter what's going on in the world, the market is always here and it's always moving. But what may not be here is your capital, your account. That's very easy to lose. That's very easy to crash. So don't have FOMO when the market is always here every single day. Doesn't matter what's going on in the world. The market's moving and digesting that information. Okay? Okay, so now on GU, I would only see buy scalps, further buy scalps, breaking above 1.365. We're not close to that yet, so I'm not going to zoom in on the lower time frame. Gold, we're going to keep on the lower time frame 1 minute because we're starting to create a little bit of a order block here and consolidation zone where my expectation is once you have 1 minute closures above 1820, you should get an impulsive move, then a little bit of a retest and continuation. Okay? And then I still have to give you guys analysis on Euro USD and USD CAD. Just give me a second. I'm just drinking some water. Okay? So, with USD CAD, we can see we have been respecting this bearish market structure from these highs. The same time the US dollar has been softer. Oh yeah, and US 30. I'll never forget for you, Ivan. Don't worry. US 30 after USD CAD here. Okay? I got you, Ivan. Don't worry. So with USD CAD here, fundamentally it's been bearish. The same time US dollar has been more bearish. And because you have the secondary as the Canadian dollar, you can understand the correlation between the Canadian dollar and crude oil, and crude oil has been trending extremely bullish. So as crude oil is hitting higher highs, this is a bullish fundamental factor for the Canadian dollar. The same time we have dollar index bears, so we're seeing overall bearish market structure being printed when you're looking at the overall macro movement on USD CAD for the time being. If you oil, I'm bullish. Oil 100% bullish still. Pullback buys, breakout buys. Oil looks like it's going $100 a barrel, no problem over the next couple of weeks and so forth. Unless there's some fundamental catalyst that impacts oil, like you have a huge oversupply, I just think oil is going to be very bullish and keep trending the way it is to like $100 a barrel. You know what I mean? But anyways, if you followed the market update webinar that was given on Monday, I called out double top sells at 1.256 as well as sells from 1.25, which are playing out right now, playing the overall bearish market structure. Do you understand? So now what we are looking for is the breaks below these lows to continue down. Okay? Listen, I told you, once we get the closures above 1820, you're gonna get your breakout play. And it will be an easy 20 to 30 pips. I literally just told you all about the impulsive move coming first. Now, if you didn't catch the impulsive move entering in this order block area or around these candle body, I literally just told you, hey guys, we're having order collection here. My anticipation is we're going to have a breakout once we go above 1820. And I literally drew it out for you guys 2 minutes ago. All right? So you can't... If you caught it, that's up to you. That's not like I can't press the entry button for you. Look. Perfect execution by a capital hungry private channel member. Breakout, caught 22 pips. $80 in $80 in 1 minute. Who pays you $80 in 1 minute? With very low lots being used as well. Very low risk manageable lots. But I was telling you guys, this is exactly what's going to happen and why. This is expected accumulation from slaying slime account. You are an expected retard. Trying to sound smart in a YouTube chat, saying shit after the fact. Oh shit. Sorry about the roast, yo. Feeling like my old self. Yeah, so far, remember like I was telling you guys? This move is the breakout so far. Only giving the breakout entry. Now, if you weren't able to catch the breakout, we have to see if we're going to get the retest at the new 30-minute candle. The only thing you have to be cautious about, right? Let me delete some of these. Is that in 10 minutes, we have economic data. Okay? In 10 minutes, we have economic data. If you want to show me your profit, you can send it to my Telegram if you wish. I just sent it to you guys in the YouTube chat. All right. Now we have to be very patient with the pullback we're gonna get because we're coming to a 30-minute candle close, and also we have economic data, USD housing and building permits data in another 6 minutes as well. Capital Hungry Private Channel gets automatic alerts 10 minutes before any data report release, on top of key level price alerts and everything else in between. Okay? Ooh, Jonathan, impulsive play, 1820. Looks like you had a buy stop and you held it with the order block. Impulsive play, you caught your 13 pips. Very nice trade, in and out, no greed, following the breakout. Very good job following the breakout. Steven, gold, very beautiful, catching the breakout. Make sure, Steven, you secure some partials before news. You don't want to get caught in a whipsaw. You know what I mean? Hopefully, for anybody who's in buys, the news just pushes us up even further because I expect it to be bad. But we have all experienced news on gold before and seen the aggressive pullback plays it can do. The tool I use for news is I pay $20,000 a year for a Reuters icon terminal. I pay for a license to this terminal to be able to give this information and create applications with it, which is the Capital Hungry News Terminal for private channel members, as well as things like this, price like economic event alerts and so forth. The price alerts are from TradingView. Like these different price alerts, these session alerts, reminders, that's from like just self-made. But I pay yearly 20 grand because I personally use it, and for the Capital Hungry business and service, I pay for a license with the Reuters icon terminal. Right? So this news here you see to the left that private channel members get is exactly what I get in the terminal. Same headlines. Indigo Central INDICES tax, 807, 807.54. It sends at 808, 6 seconds later. You know what I mean? It's exactly the same, give or take maybe 10 seconds. Oh, shit. Gold's still going for the people. Now your runners are blessed. But don't have FOMO. Don't have any FOMO. But do you see what I'm talking about in terms of now, after getting the respect to this demand zone, buy orders being collected in the market, starting to break above the bearish structure that we're going to be targeting back into 1828s and so forth. Right? $20 to 40 pips. Oh, wow. Great job catching the gold buys. Great work. Great job with the GJ sell scalpers. Or sorry, buy scalps. Good job with the buys. Yo, everybody, remember, don't get greedy either. Okay? Don't get greedy. Listen, we broke down the fundamentals. We broke down the technicals. We have 2 minutes for news. I expect news to further help our bias in terms of gold buys. But don't be surprised if we get aggressive pullbacks. Now, think about the psychology. No, did I take any trades? No, I did not take any of these scalps. I do have a little bit of FOMO that I should have held one of these 1812 5-lot runners. But it's all good. I caught my 60 pips. I made my I made my $9,000 in the day. I'm not feeling any type of way. I took the same analysis I gave you guys in the Monday market update webinar. It's just harder for me to do analysis on all these pairs, give psychology tips, break down the price action, direct this live stream, and trade manage myself. It's way too stressful for me. I know Raj is good at doing it, but I personally like to give as much information as possible during these trading streams. But I already caught the same bias, Dominion markets, except I took the trades overnight at Asian from 1812 buys, and I closed it up in the range here. I did not take any further trades. I secured that. And also, the analysis for these buys were given to you guys on Monday for free and yesterday, talking about bad US economic data. So don't forget to check out these webinars. Tons and tons of information. 160 of us watching right now. I should get this up to 1,000 views if all you 160 people watch this. I know it's super sad that I can't hit 1,000 views, but whatever. Fuck my life, right? Giving all this fundamental information, technical information, but I can barely crack 1,000 views on a YouTube short. But if I showed a Lamborghini, I would hit 20,000 views, no problem. But hey, that's because people always want shortcuts. But anyways, so gold is zooming right now. Everybody is happy. But from a psychological standpoint, emotionally neutralize yourself. Okay? Why am I saying emotionally neutralize yourself? Because you have to understand that if you get too excited, if you get too greedy, because think about it right now. We just did pre-planned analysis. We were looking for buys from above 1820. We had the buys from 1820 play out. We're taking these trades as a group, right? You can really have a huge dopamine hit that comes into play. All of us are feeling very excited. We're feeling very happy. The trade played out. People are making money as a group. It can really impact your emotions. A lot of people and mentors talk about managing negative emotions like anger or over trading and so forth. But a lot of people neglect managing the greedy emotions on the other side. If you get too excited, too happy, it still starts to fog your decision-making process. Whether you win a trade, whether you lose a trade, you have to learn how to emotionally neutralize yourself. Whether that means going outside and getting a quick breath of air, maybe doing some quick push-ups, stepping away from the charts for a couple of hours. Learn to emotionally neutralize yourself. You can burn yourself on either end of the spectrum of emotions. Okay? So don't forget that. Show people my account balance? Oh, no, that's okay. Do I have a public track record? No. I do not sell signals. I do not manage other people's investments or money. So I do not have a public track record. But if you want, you can see my month-to-month changes in profit and loss if you come to this Telegram analysis channel, and I show that all the time. Like here, this is Dominion Markets. You can see my last full month of live trades of both wins and losses. So I'm not shy to show that. You know what I mean? I show my live account proof. I show my wins and losses on a weekly and monthly basis. I just personally never had a public track record because I never sold signals or managed other people's investments. But another great thing you can see is in this private channel, if you go to the first post, oh no, sorry. This isn't the private channel. In this public free channel, if you go to the first post, I started this channel in 2019. You can go see my trades from 2019 from when I was doing penny lots. You know what I mean? So you can see my development from penny lots on this time. It was on Vantage Broker back in the day when gold was at freaking $1,300 an ounce, right? You can see my development from 2019 penny lots where I was getting consistency to where I am now, showing these potential live account trades, showing 5 lots, wins and so forth there. But also you can come check out, just go to the gallery. You can check out all the live. I share everything. You can even check out my business license. So I am not in the business to manage money, to sell signals, or to handle investments of anybody else. Capital Hungry is a market research service. This is what my business specializes in. This is what my business is licensed for. Besides my own personal trading, the Capital Hungry private channel is an online market research and educational service. This is my business license in Canada with the CRA. You know what I mean? So yeah, you can go check out what we do in Capital Hungry private channel in the costs, exactly what's offered. You can go check out my trades from 2019 to now, showing live account. For example, this was a gold buy the previous week off the exact same 1812 level, 15 lot, catching 60 pips. No, I'm not with Vantage anymore. I had to switch from Vantage to Pacific Union and Dominion because I live in Ontario, Canada. Due to OSC regulations, the Ontario Security Commissions, Vantage stopped supporting Canadian clients. So after, I think it was last year, November, or 2020 November, I think is when Vantage stopped supporting Canadian clients. So I was forced to switch brokers. But before, the first broker I ever used was Vantage. But then my province changed their rules and regulations and Vantage stopped supporting us. All right. But anyways, here you can see my wins and losses over a period of a month. It's not like I'm trying to tell you guys, hey, I only win. I don't take losses. No, I take tons of losing trades. You know what I mean? But at the end of the day, I focus on keeping my losses small and my wins larger and focus on the risk management and keeping this as a game of probabilities, right? You can come here, you can see I have no problem saying, hey guys, this is my live account. I made $73,000 or whatever it may be. And I took these amounts of huge losses as well, or pre-planned losses. But I still managed my emotions, kept losses small, and milked out the wins and so forth. You know what I mean? You can come check that out all in here. All these will show you the accounts, live proof, and so forth. Tons and tons of trades, charts, analysis. That's all in the free channel. All right. The private channel is very intensive. I do not suggest it for new traders. Okay? No, there's no lifetime fee in the private channel, sorry. I don't have an average percentage that I gain per month. It really depends on the markets. I personally only trade gold and GJ. Sometimes you'll have GJ in a range for a week or two. Sometimes you'll have gold trending extremely clean, and it's much easier to play and take advantage of. So I don't have a set goal of what percentage I'm trying to achieve or an average percentage I'm trying to achieve. It depends on what's going on in the markets. How are we trending? Are we having some clean-cut moves? Can I take advantage of those moves? Or are we in consolidation zones that I don't really want to touch and so forth? You know what I mean? Great job catching the gold buys. Excellent job. Okay, so sorry, we had that economic data come out. Mixed data on the building permits is still high. CPI from the Canada side is still high as well, and from the inflation side. So that's good for gold. The next set of gold buys would most likely be with the new 4-hour candle. This gold trade is done. You know what I mean? This gold trade is done. So that's it for the gold trade for today. Ah, Lee, you took the retest here at the last previous 1 minute high, back up to 1824. Good job playing the momentum as a scalper. And good job looking at the bullish price action. Minor pullback, retest of that area. I like that continuation trade you caught. Good job. If you are a new trader, do not join the Capital Hungry private channel. For brokers, I suggest using Pacific Union and Dominion Markets. Dominion Markets has been fantastic. If you are a new trader, do not join the Capital Hungry private channel. I suggest you go watch all of Wix Don't Lie's live streams and join Market Fluidity first. Raja, as a novice trader, Raja will give you guys a great foundation on risk management, psychology, price action candle reading, and and pips, understanding all that stuff. All right. So if you guys are new novice traders and you want a foundation, go to Wix Don't Lie first. He'll give you a great foundation, great starting ground. Okay? If you have gained some experience in the markets, but you're looking to gain a trading edge with more higher time frame focus, fundamentals, news, market sentiment, maybe like price action on the 1 minute and so forth, then come check out Capital Hungry. Okay? Yeah, Dominion Markets is a great broker. Market Fluidity is a great service to gain a good foundation in the markets. Capital Hungry is a great service to start pushing yourself further if you want to increase your knowledge and confidence in the markets. Using them in combination is even better, right? Okay? If you guys don't mind, I finally have to take my washroom break. I gotta take a piss. I'm gonna sit on the toilet for a quick 5 minutes as well. All right. So I'll be right back. Just give me about 5 minutes. Yes, Wix Don't Lie on YouTube. Yeah, I'll just type it out in the chat. Just YouTube Wix Don't Lie or Raja Banks on Instagram. He's huge, huge following, way bigger than me, huge audience, has been doing this for years and stuff as well. All right, give me a second. I really got to go to the washroom. I'll be right back. Sorry, oh, my mic was off. Sorry. My mic was off. Thank you for telling me. All I said was I'm back. I didn't sit on the toilet, just took a quick piss. So what I was talking about that you guys just missed me say is, as scalpers and day traders, it's not just about focusing on the technicals and fundamentals. You have to understand your trading style and understand the market timing. What I mean by that is, through New York session open and the volume over the last 45 minutes, we had a very nice buy move above 1820 and the GJ buy scalp for 20 pips. But now in the next 15 to 10 minutes, we're having these intraday candles close and new 4-hour candles set up. Usually with larger intraday candles, 4-hour, daily, and so forth, you have a higher probability of getting some pullbacks and setups to better price points before possibly continuing with the overall trend. So with the new 4-hour and going into NYSE, if the buy volume is there, it wouldn't be out of the ordinary for the new 4-hour candle to still give a retest to 1820, maybe even deeper to 1815 before continuing bullish again, giving some potential further scalp and day trade ideas to take advantage of, okay? With GJ, you can see our bullish bias is still intact. I would have liked this 4-hour candle to close more bullish above these previous candle body highs, but we still had this previous 4-hour candle get pretty much engulfed, showing some nice bullish price action on the lower time frame. With this new 4-hour candle that's going to be opening up in about 13 minutes, getting a deeper pullback to 155.8, or the buys back above 156 are still very evident trade ideas and setups to take advantage of as you're looking at the price action and market structure going into NYSE volume and of course London session close at 11 a.m. Eastern. Yes, I'm going to do some analysis on Euro USD and US 30 before this 4-hour candle closes. So, on Euro USD, you can see the overall market structure as dollar has been bullish, Euro USD has been bearish. You just have sellers print lows, consolidation phases, breaks to the downside, sellers print lows, pullback phases, breaks to the downside, and this is how you've been trending, right? You can see the overall same structure. Sellers consistently printing lower lows, either having consolidation phases or pullback phases that go to retest better sell areas of interest. This pullback here on EU was just 30 pips away from retesting the previous lows. This consolidation zone retested the previous lows. This retested the previous highs, collecting more sell orders in the market and making your way down to the overall respecting bearish market structure and making your way down to revisit previous lows and continue into lower lows. So on Euro USD, after having this aggressive rejection and Euro fading out that strength and now coming back below this consolidation and zone and order block, it does look like as long as we stay below 1.4, Euro USD should slowly make its way down over the period of days or weeks, 200 pips down to 1.2 to revisit the lows printed by sellers after collecting more seller volume and order flow from better price points and continuing the overall bearish trending market that we've seen being respected for almost like a year now. You know what I mean? So that's very easy and simple to dissect, is the bearish market structure. Very easy to see how we almost came to these previous lows here before collecting more sell orders. This bullish price action that led to this pullback got corrected in fairly equal time, and we're back below the same order block in range. I'm going to personally be looking for 1.4 area pullbacks, 1.385, breaks below 1.3, and I want to start to take the sells to target these previous lows. Okay? So now, with the key levels and price sensitivity areas of interest laid out, I'd be looking for sells at the red boxed price points. 1.385, 1.36, where you see a lot of candle body rejection in that area. Break below 1.31, break below this price sensitivity area, 1.28. The only thing you have to be cautious about is I do see these sells playing out and starting to take shape, but price action starts to get very, very messy in this consolidation zone. It's very similar to, like, let me show you guys the example. Let me show you guys the example here. You have a consolidation zone, right, that you can identify. You start to break above just to get a deeper pullback to collect more sell orders. And as you make your way down, you do overall start to see a decrease in the value of euro against the US dollar. But as you enter back in this consolidation zone, you can see these aggressive whipsaws, pullbacks, and so forth. Right? So just be cautious as we enter this consolidation zone that to see those aggressive pullbacks and whipsaws as we're overall making our way down would be completely normal. Does that make sense? Yes, Jonathan, if gold technically breaks above 1830, I at least see a run to 1850s, and then from 1850s we'll assess accordingly. 1880s is a pretty large and far target range to say, yes, we'll guaranteed go there first. I like to take things step by step, and on the higher time frames, when I'm looking at like the weekly here, right? Once we break above this price sensitivity area, I do see us going into the 1850s on the intraday time frames, and as you stated, potentially back into 1860s, 1880s, revisiting these price points of interest. We just really need a break of this consolidation zone here that we've been stuck in for a period of months. You know what I mean? But at least I see us, once we break above 1830s, to come here to the 1850s, 1860s first. Then after, you watch your price sensitivity areas of interest. You know what I mean? So I'm expecting movement like this. Like maybe we'll have the breakout, we'll trend bullish to here, get a pullback to 1820, continue up, get a move to 1900, pull back to 1860, depending on the fundamentals, of course. Now, the only thing fundamentally that can stop that bullish rally is in March, the expectations that the FOMC and Fed interest rate decision in March, they're going to increase interest rates. So obviously we still have another whole month to go from there. We still have February itself. We still have 10 days in January, then February itself before we even think about that. But at least going into March, I can see us going up into the 1860s to revisit here. If they actually increase interest rates, I wouldn't be surprised if we make it to 1860, then start to melt. Because the Federal Reserve increasing interest rates is a bullish factor for the dollar and bearish for gold. Okay? So yes, technically, I can see us once we break 1830s making our way up to here. But we have to be very cautious going into March, as that's going to be the interest rate decision. And if they actually hike rates, gold will drop and go bearish. You know what I mean? But yeah, what you're saying does make sense. Once we break above the 1830s, it should be a very nice intraday bullish trend going to the 1850s. Okay? Yes, I already did UCAD analysis where we're going to be looking, where we were looking for sells from 1.25. The next set of sells on UCAD would be having clean hourly or 30-minute closures below these lows. Then we can validate we had more sell orders collected from this double top, and we have enough volume to break lower. Let me show you guys an example. It'd be like this, where you had a low printed here, you enter a bit of a consolidation phase, you collect more sell orders from a key level, but you still don't break those previous lows until almost a week later, where once you finally break those lows, you have a nice continuation move, right? We're in a similar situation here on UCAD now, where we're still having nice bearish market structure. We're still having the sellers in play, but we have this larger consolidation zone, and we've already made our way back down to those last lows printed, which is here. For us to see further downside, we need to see intraday candle closures below those lows, which it looks like that may come over the next periods of days into closing off the week, as we had more sell orders collected from this double top at 1.256. Yeah, right now we had some nice, if you followed the Monday market update webinar, we called out the sell trade ideas from 256, the sells from breaks below 25, to at least go and target these lows as target points, which was a great 100 pip trade or 40 pip trade. But now for further sells, we need to clear those lows. Okay. Last but not least, US 30 stock market index. Now, the markets are very optimistic and overall very bullish on low interest rates, support by the Federal Reserve, and higher inflation. You can see it's very normal, just like I showed you guys a trending market on every other trading instrument. On here, every time you're having buyers consistently, I'm doing US 30 right now. Anytime you're having buyers consistently print new highs or revisit previous highs, you can see that you enter these profit-taking waves in pullback structure, which is completely normal as the buyers take profit, sellers jump in hand. This creates a pullback to a more favorable demanded price point before continuing bullish with the overall trend after having buy orders collected from more favorable demand zones, which has you continue up bullish to revisit the previous highs and also continue even higher, right? As investors got their fire sale prices from the lows, as they've been riding the high inflation, which inflates the price of all goods within the economy, including the stock market, as you have smart money pooling in more order flow into the market on top of low interest rates. This is all you have seen happen over 2 years now. Over 2 years, this is the simple trend US 30 has been following, right? So now, when we're looking at current market structure and price action, what can we see? The same questions we can ask ourselves. We're seeing a profit-taking move by buyers from new all-time highs being printed, right? We're failing to break previous lows, with the lows getting significantly smaller and smaller and collecting buy orders from more favorable demanded price points, where here we came to 35K, right? You can notice the price action that once you come to these demand zones, you have very strong bullish price action that starts to correct the downside moves. As overall, we've already had a pretty aggressive dip. The profit taking by buyers is done. We're coming to the 35,200 key level and respecting it and showing support. And you can also see much stronger bullish price action, correcting that downside candle, bullish engulfing move, and so forth. For US 30 today, as you can also see around the world, various regions have also grabbed their dips. Like for example, the Euro markets, the Euro markets, the UK markets, they're no different. You had a dip from the high. Overnight, those dips got bought up. Dip from the high on the German DAX, you're starting to see a support being created and that base being created. Also, the same time GJ started pushing bullish is the same time there was a lot of investor confidence in the UK equity markets. My expectation is if we don't break 35K and 35,200, we should start to trend bullish back up to those high points. Okay? So, on US 30, at the new 4-hour candle, as well as the NYSE, I'd be looking for pullbacks to these areas. Because if you guys notice, if anybody trades US 30 at NYSE open, there's a very high probability of very aggressive pullbacks and liquidity grabs with that market volume coming in. So it wouldn't be out of the normal to get a double bottom here. After we've had a significant pullback, starting to notice some exhaustion here, I'd be looking for the buys from 35,200, 35,300, and buys back above previous lows at 35,700. At this point in time, I could only take sells if we broke below 35K. Okay? Okay, so anyways, everybody, it's 9 a.m. Eastern. We've been running this trading stream for 2 hours. We broke down and analyzed fundamentals, technicals, market sentiment, economic events. We called out live trades with pre-planned analysis and live entries on gold for 18 to 20 buys. That played out for anywhere on the low end from 15 pips all the way up to 40 pips. We called out live trades and scalps on GJ for buys from 156, which you can see again. You even came to 156 again and got another 10 pip bounce for the time being. Okay? So we gave a lot of fundamental information, technical information, information on risk management, trade management, psychology. We called out some live trades. I think this is a picture perfect live trading stream. We got to share a bunch of information, share value with each other, learn more, answer questions, and make money. Can't really go wrong with that. How many people do we have watching right now? 200? Let's at least see if we can get 200 to 250 likes on the live stream. And if you guys enjoy this content, make sure to send a like, comment on the save stream, and I'm going to be wrapping up and ending shortly here. Thank you all for attending. Thank you for your support. If you want to learn and be like me, make sure you check out the description and all of the resource links there. Okay? You have tons of free resources, paid resources, suggested brokers, and so forth. The private channel is still open to signups, but understand the private channel is the next level. It's very intensive. Like, look at, you want to see how much work we did in the private channel so far just to start off the week? Let me show you. Okay, let me show you. This is the private channel main feed, not including the newsroom, not including the price alerts and so forth. At the start of the week, we already did 3 webinars for a weekly recap psychology webinar and market update and trade ideas. On Sunday alone, we sent out psychology reminders, risk management reminders, did a fresh weekly psychology webinar. This was the topic of getting paid for your time versus getting paid for your skill. I sent a weekend news briefing report, weekly recap and refresher webinar, weekly economic events, holidays, fundamental points in focus, market sentiment, trade ideas webinar. Then we do our market updates and New York scalping sessions every single day with at least 2 Zoom sessions a day. A trading session like this and a market update and trade ideas webinar. I've also started to introduce, when I have time, Asian scalping and study educational sessions through the Asian session. Okay? So on top of all those webinars throughout the week, trade ideas and content throughout the week, you also get key level price alerts, access to the new room, economic event alerts, access to the community where other members share their analysis and trade ideas, session alert, open and close reminder alerts, and all of those resources on top of access to the community, on top of a great job with the gold buys, on top of also further access to 50 plus educational webinars. Okay? So remember that. All of those resources are at your fingertips. Like and subscribe, share it around. I'll see you guys next time. Everybody take care. Have a great day. Thank you for your support. Thank you for watching. Make sure you guys check out all of the other webinars I've done recently. Let's see if we can get them to 1,000 views. Fucking sad, but it is what it is. Watch out for GBP, as in 10 minutes, Governor Bailey speaking. Thanks to the automatic alerts every 10 minutes in the private channel. So watch out, stay out of GBP pairs. Bank of England speaker, 10 minutes. Yeah, there's also 600 webinars for backtesting. There's 50 plus educational webinars you won't find on the YouTube on fundamentals, technicals, psychology, risk management. Tons and tons and tons of content. I'm going to save and upload this, and I'll see you guys all, guys and girls, all next time. Please take care. Have a great day.